All right, so President Trump is set to roll out a wave of tariffs to advance his America First economic agenda.
It's an event that he is calling Liberation Day.
What is Jacqui Heinrich calling it? Jacqui, what are you calling it?
A lot to handle.
It is.
I'm trying to wrap my head around what's coming. We don't have all the details right now, and so we're really awaiting, just like everybody else, the full news on what this will look like. But the White House has said it's already seen evidence that this strategy is going to work, including from billions of dollars of private investment coming back into the country. They're telling anyone that's been spooked by what they've seen with the jitteriness in the stock market that this policy is ultimately going to return production to America, generate more American jobs, and also more tax revenue. And the president says ultimately Wall Street's going to be just fine.
They will be effective immediately. And the president has been teasing this for quite some time. They're not going to be wrong. It is going to work. And the president has a brilliant team of advisors who have been studying these issues for decades. And we are focused on restoring the golden age of America and making America a manufacturing superpower.
There are several unknowns, including how the White House plans to structure this. The White House trade advisor, Peter Navarro, said on Fox News Sunday the tariffs could raise $600 billion annually, which some took to imply an average rate of 20%. According to some reports, the president has considered a flat 20% as a way to generate more revenue to offset the tax cuts he hopes to push through Congress. But Moody's chief economist said yesterday a 20% universal tariff would be a worst-case scenario combined with full retaliation from other countries on U.S. goods. Moody's claiming its simulation with those inputs would wipe out 5.5 million jobs, raise unemployment to 7%, and drop GDP by 1.7%. But the president's allies say it is not going to come to that.
You have to trust the president's instincts on the economy, okay? And why? This isn't blind faith. Remember what he accomplished in the first administration.
Everybody's a little concerned. We all are. But at the end of the day, we got to have faith in our leadership. Our country's going in the wrong direction, $37 trillion in debt. We've got to get manufacturing back to the country, people back to work. A better way to do that is tariffs. So let's give it a shot and see what happens.
Now, President Trump said he might not fully equalize tariff rates with some countries because their rates are so high he would be, quote, embarrassed to charge them the same rate. There will also be some kind of new charge applied to new countries as well as sector-specific tariffs. Steel and aluminum imports are already subject to a 25% tariff, and 25% tariffs will also be applied to auto imports starting tomorrow. That does include auto parts. The administration, though, has welcomed deals from other countries to try to offset some of this. The UK, for instance, is trying to shape an agreement on artificial intelligence. On the other hand, though, we just saw yesterday the Prime Minister in Canada and Mexico's president come together on a phone call to try to come up with some kind of a deal to bolster their trade and blunt the impact coming from the U.S. So we'll see what comes out of the 4 o'clock Rose Garden press conference, guys.
That's right. And, you know, Jacqui, I was just thinking about that. The president's calling it Liberation Day, but maybe we should call it Libation Day because, you know, Wall Street's all over the place. They might start hitting the sauce at 4 o'clock when they finally unveil this thing.
Maybe even sooner.
Yeah, that's right. I was reading this morning that apparently, according to the Wall Street Journal, some people in the business community and on Wall Street are still banking on the idea that the White House might actually pull back on the tariffs if something bad happens to the economy. And I know Goldman Sachs is predicting now with the tariffs, there's a 35% chance of a recession.
That has been put out there. I think also the impact of a recession on other countries would be more difficult. For instance, with Canada, it will be harder for them to pull out of a recession, which is a big concern for them. But to your earlier point, you know, we have seen the president's willingness to either delay some of these tariffs when he gets a reaction from companies that would be impacted by them, or when he gets outreach from other countries, willingness to come together on some of these trade agreements and sort of reshuffle the groundwork of what it is we're sort of building off of. So we haven't heard a lot of proposals from the rest of the world on what exactly it is that they're trying to offer the president to offset this. He might get into some of those details today. But I think the real issue that Wall Street is looking at is just the uncertainty here because we don't know so much. And if he decides to put in place a universal tariff, whether it's a 20% or something less, and what that means versus taking sort of a piecemeal approach and dealing with individual countries, that will have different kinds of impacts on the economy. And that's the reason that investors are worried, guys.
Okay.
Thank you so much, Jackie.
It's all about Live Nation Day.
Trump just doesn't want to be taken advantage of, and he says, not on my watch. If everything's got to be equal, this is reciprocal. And this is going to be great news coming down at 4 o'clock for your interview tomorrow. You're talking to J.D. Vance in Washington.
Yeah, tomorrow we'll be doing the show. You guys will be on the couch. I'll be at the White House. And we're going to ask the vice president about this. He's been a great messenger for the president. And I think this is where the Republican Party and the populists kind of start to split apart. And this is how you got that Democratic coalition that switched over from the Democrats to the Republican side. All those union workers, they support this.
Right.
This is their jobs.
Yeah, what Ro was saying that it really helped his district with the steel tariffs last time. Now there's going to be all imports on steel, 25%, aluminum, 25%. Auto imports expected to start today, too. They expect reciprocal tariffs just on the money. If nobody changes what they're doing and what they're taxing us, $600 billion. But Moody's comes out, and they said that an escalation of the trade war could wipe out 5.5 million jobs and lift unemployment to 7%, and GDP could drop 1.7%. That's if people don't come off it, and Moody's is not for it. But the tariffs will apply will bring a lot of money in on just the tariff goods. And let's see, the ultimate goal is to bring manufacturing back here.
Right.
Ro doesn't think it's going to bring manufacturing back.
Well, Brian, that is the dream. Keep in mind, this is a gigantic experiment like we've never seen before. You know, on paper, it looks great to the president and his team, who are talking about it would be great to bring jobs back to the United States. But keep in mind, people have got to come over here and build factories, and that takes years. And there's a lot of uncertainty on Wall Street and also in the business community about, okay, this new round of tariffs, how long is it going to last? Are they going to last 1 year, 5 years, 10 years? They've got to be able to plan. And that's why the stock market has been all over the place.
Well, the reciprocal tariffs can end today if they just remove them off our country as well.
I'm Steve Doocy.
I'm Brian Kilmeade.
And I'm Ainsley Earhart. And click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis.